all over the country, one of the biggest issues lately has been affordability. Down payments an issue, credit's an issue, but it's overall affordability. During COVID, rates went down and housing went up. We have more people now than in 2008 during the crash, and we don't have enough housing to fit them. 2008, we had more houses than people. What changed that? Millennials and Generation Z, huge generations of population. Also, the baby boomers are living longer. So we have housing issues. Those housing issues plus inflation bring prices up. So it comes down to affordability. When you rent, you're giving 100% of that to the landlord. People say, well, what are interest rates on mortgages? It's not 100% like it is on renting. So what I'm going to discuss today is unique ways to get into a home. What I hear from people is, I can't afford it. It's so expensive. Do you not know how much eggs and gas and all this costs? Agreed. So let's get creative here. So one way is for you to buy with a friend or family member. Why would I do that, Ed? So in the market at X, you can't get a house, but with two families, you can. So you buy a larger house, maybe it's two single people, brother and sister, co-workers, whatever. They buy a house together. Now, instead of renting, they're building equity. They have possible write-offs. And guess what? They can rent rooms out. So that's an option. Well, Ed, I don't know that I want to buy with a friend. That could be nerve-wracking. Something could happen. That's why you get a good lawyer to write up a good agreement. Now, all of these ideas are a little outside the box. But in today's world, where the box keeps closing in on all of us financially, strains, kids, animals, everything's more expensive. And so is in housing. With time and a plan, you can reach home ownership. Going to buy a multifamily. What is a multifamily, Ed? It is a 2, 3, or 4 unit. Those are all residential. Outside of that, it's a totally different type of loan. Many years ago, it was hard to buy a multifamily because you needed a lot for a down payment as owner-occupied. Now you can get in through FHA, the government, with 3.5% down. Let's say you buy a 3-family. You can use 75% of each unit's rent to qualify for more. Wow, so what you're saying is I get a bigger unit in this multifamily, have the other units pay down and make my payment better than maybe me affording a small single family on its own. Exactly. And you're building wealth. And there will always be a need for rentals. And back to what we said, our biggest thing is affordability. Rents keep going up. You now are in the driver's seat. Also, by doing either case and home ownership, you could have a dog, you could have a cat, you could have a backyard for your kids, and you can get out of fear. When you rent a property, you don't know if that landlord's telling you to leave. I have many stories where I get calls from families and it tears my heart out. They've been in the house 7 years. They've got 3 kids. They've got a dog, a cat, and they're in tears because they were paying an under market rent for years. And now the landlord says, bye, you got to get out. Rents are through the roof. And they didn't do a call with me. And their credit is tough. So let's think outside the box. Let's look at ideas. ADU, accessory dwelling unit. What the heck is that? I can speak for the state of Massachusetts. We just, across the board, put regulation in. It allows, now town regulation supersedes it, but the towns allow you to build out your basement or your garage into a rental unit under a lot less permitting. Why is that important? Kind of like the multifamily, I can now use the rents to offset. So, I only afforded X on a single family on mine and my husband's income or mine and my girlfriend's income, but now I have buying a house with an ADU and that apartment is $1,000 a month. So now I get another $750, 75% of that towards my income and offsetting, and I can afford more. Yes. Here's one that people get a little, I'm not so sure about. Non-owner occupant co-borrow. What the heck is that? So you, Mary, can afford a house and it's $250,000 on Cape Cod and there are no houses. You can afford a house in New Hampshire and it's $300 and there's no houses, or Ohio and it's $150 and there are no houses. But you go up $150 or $200 grand or even $50 grand in some markets, there's more. But Ed, my income won't let me qualify. Well, Mary, do you believe that you have a lot of friends that are renting out rooms in areas. Oh my God, if I had rooms, I could rent them out easily. Mary, do you have some cash money come in from eBay and other things? Yeah, but I can't show that on my taxes. That doesn't help me qualify. I get it, Mary. This is where we get the cosigner or non-occupant co-borrower. Who is that, Ed? Uncle, aunt, cousin, godparent. They don't have to live in your state. What are we doing with them, Ed? We're using their income. They've got to have good credit and low debt. They're going on the loan with you, so you qualify for more. Now, they own the house with you. They're on deed with you, and if you don't pay the mortgage, their credit goes. So there's a lot of conversations here. But ultimately, Mary, if they co-sign with you, they own it. But now you buy a bigger home. Now you can rent out rooms. You could already make the mortgage payment because you have this eBay cash business or this dog walking business. I'm not putting you in a house you can't afford. I'm putting you in a house that the regulations have said you can't, or you can afford it. And now we're using a system to get you there. And you can give your gifts and now rent out rooms to friends. So to me, again, we got to think outside the box. Otherwise, we'll be a renter forever, or we can be a homeowner, helping other renters have affordable rents.